All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All of this is with the backdrop of institutionalization for the two core assets that are coming probably in the next 7 to 8 months, if not sooner than that. How much they will actually move, how much the inflows will actually be, remains to be seen. Everybody has their guess. But I think just with that backdrop, you've got so many positive catalysts.
All right, everyone. We will be back to the program in just a moment. But before we do, I want to share something that Blockworks has been cooking up for these last couple of months. March of this coming year in London, Blockworks is hosting DAS London, the largest institutionally focused conference in all of crypto. Goldman, JP Morgan, Point72, all in one room so you can know what the big money is doing. So click the link at the bottom of this episode. It'll take you right over to the homepage and use BELL20 for 20% off. And I will see you in sunny London town in March. All right, everyone. We are back. I don't know if that's another episode of Bell Curve or the industry as a whole. It's such
both.
a dorky joke. It's both. We got Michael's 1 and 2 here. What's up, buddy?
Doing well. Once again, we've shed the dead weight. We have the Streamline podcast ready to go.
Lean and mean, baby. Lean and bean, holding up the numbers, for the pod, doing what we can. Yeah, man, it's been a good week. I guess I think I actually asked this to Vance the last time we recorded together, but can't ignore what's going on price wise here. I guess my question for you is, are we back? What's the vibes on the ground?
Well, first off, I think you can and probably should ignore what's happening with prices. The big news this week was frankly just not price action. I think it's just all the positive momentum from announcements to launches. Now there's rumors of more spot ETFs. In particular, BlackRock apparently filed their application with the state of Delaware to have their trust. They haven't officially filed their spot ETH ETF application yet, but it's expected that that's impending. I don't know. The sentiment here is there's just a lot of positive momentum. Also happening coincidentally on the 1-year anniversary of the FTX blow up. And I don't know if there's a specific day that you can point to, but this week, last year, just thinking back 12 months, how far things have changed. There was a non-zero possibility that the industry was done at the end of last year. Nobody knew where the bottom would drop, what was left to drop, who was left to drop. Feels great to put a lot of that in rear view. And I think it kind of culminated in a lot of ways with the rulings against SBF.
Yep. I tend to agree with that. I think that was, I think people, now there's a little bit of hindsight bias and everything looking back, and lots of people coming out and saying, yeah, we never really liked SBF, but the brand that SBF had and FTX was, it was right up there. And even after, we have to rewinding the clock back 3 arrows when that first news first started to break, everyone was like, oh, this doesn't seem right. This just feels wrong. But then even after that suspicion, you start to look around and wonder who else is whole here. I don't think anyone believed really when the rumors started to surface about FTX. They just built such a solid brand. And I actually do want to, just as opposed to sort of as an interesting hypothetical, I don't want to start with this, but there's talk right now. There are a couple of bidders out there bidding for FTX. So I talked to actually Mark Yusko today. He's Figure is one of their portcos, right, and they're bidding. Bullish is bidding as well. So it'd be curious to kind of game out what a restart would look like and what the brand would sort of be. But I guess I would like to hear, Michael, from your perspective, maybe the two constituents that you talk to the most, both on the entrepreneurial side of things and then also on the sort of LP interest side of things. So maybe starting on the entrepreneurial side. So, Miles, one of my good buddies who's our sixth man here on this show, I was talking to him from his seat at Reverie, and he was saying some of the deals, the deal flow just in the last couple of weeks has really picked up, and he's starting to see very cool stuff sort of come onto his plate, where before he really had to dig around, it's sort of noticeably picked up. I'm curious what things look like in the private markets from your perspective.
Yeah, so I think it's kind of the tale of two different cities in the private markets right now. You have a lot of companies who raised money, maybe seed capital, early stage capital in 2021 with a projected 18-month runway. And second half of this year was a lot of those people having to come back to market and frankly just not really seeing success. Not enough traction had been made. Industries, if you're an infrastructure provider, you're waiting for the users to come, you're waiting for the apps to develop. And so, the metrics aren't always going to be positive there. But on the flip side of that, I think you have a lot of new ideas and new directions. And so if you're starting from ground zero, I know, Niraj, formerly of Polychain, announced his fundraise yesterday. There's still sort of initial capital fundraises that are exciting, getting done. And my like basic understanding is that they will be met with more bullish perspective going forward. And the timing of that could be really, really positive. I think the last 18 months, has been pretty negative, hard to survive through that period of time, especially if you need to raise. And so we're deal flow has definitely picked up. It's just a lot of sort of the haves and the have-nots at this point. So there's a lot that are, disqualified by default, but there's still a lot that's really interesting. I'd say the other stuff too is there's things that are happening and working on chain, which make investment cases, even from a venture perspective, and venture perspectives are things that could go, 20 to 100x type return profiles. And those are things that exist on chain. And maybe instead of investing in the equity, you're actually, working with the treasury to buy tokens or buying tokens on the secondary market. So the universe of opportunity from a venture investment perspective is vast. On your point around the FTX potential rebuild, we went through a lot of this last year as well. There were a ton of companies that were going through bankruptcy proceedings. I believe that it's closed and it's all done. But I think Mike Arrington put together a coalition to rebuy Celsius and respin that. So I think we're going to start to see some of these things come out of bankruptcy proceedings and receivership, settle all of the creditor claims and kind of put a new foot forward. What I will find to be really interesting, and FTX, to your point on brand building, definitely had the biggest brand, also had the biggest brand blow up. What do you do? Do you take the tech? Do you take any remaining members of the team? Do you take the brand and run with it? What are the residual values? Because creditors are going to get made back whole on any assets as much as they can, up to 100%. And that'll take a long time. So my big question with all of these like respinnings are just like, what do you move forward with? And kind of what do you keep and what do you shed? So I'm fascinated with the bankruptcy proceedings.
I am as well. So the other thing that I would have to imagine is that some of these bankruptcy proceedings are actually getting made easier by the run up in prices, right? A lot of the collateral that folks had on these, the Celsius of the world or the FTX or whatever, the assets were crypto assets for the most part. So liquidity going up, token price going up, that's got to be good. I would imagine it's maybe easy.
It's probably good for the bankruptcy. I guess the owners of the bankruptcy or the debtors in the bankruptcy, because but probably terrible for the creditors. And most of the people that are creditors are people who deposited, to your point, crypto into these ecosystems, lost their crypto. The thing that they want back is returns in crypto form. And like I said, we kicked the tires pretty hard on some of these options, started talking to unsecured creditor groups, started trying to piece together, what these models could look like. Every single one of them. And I was just listening to a podcast with a couple of DCG creditors as well, and Genesis creditors. All they want, if you deposited 10 Bitcoin, they just want their 10 Bitcoin back or as close to that as possible. They don't want, $21,000 per Bitcoin in the form of cash paid out over the next 4 years. And that's what you're looking at if you ultimately get something back. And so the cash denomination, the USD denomination for bankruptcies, I think it actually hurts way more than it helps. Sure, it helps get that percentage dollar back, But most of these situations are on the day of bankruptcy, you take a snapshot, and that's the dollar basis that you're working back towards.
Oh, dude, I did not know that. That's terrible. Man, I did not realize that.
I think it's actually pretty painful for the people who are watching this, price run up.
Ooh, all right. Well, never mind then. I just assumed that they'd be getting paid back in kind, but that sucks. Okay,
I
never
mean,
mind
if you
then.
put Bitcoins in and the Bitcoins aren't there, it makes it even harder to buy those Bitcoins back and give them back.
Yeah. All right. Good point. All right. Let's talk about what an FTX restart actually could look like, even just from a like strategic sort of standpoint. Because when I think about the FTX, the asset that exists today, you could kind of subdivide that into there's the brand, right? And honestly, I think that's kind of an interesting question, whether or not that's been wholly destroyed. Then there's the existing customer base. So I would actually probably imagine that if like there's some percentage where if you restarted that bad boy and you are sort of made whole, maybe a little incentive, like some customers will obviously take whatever funds they have and immediately move, but some will probably stay. And then the other one is the tech stack. And that's the one that I just have no proprietary information on. I know FTX, the whole last bull market, we were like, oh, they're such a good risk engine and yada yada. But it sounds like it was just Alameda on the back end, just eating losses and performing liquidations themselves. So maybe that's not the case. But the rest of the other two components actually could be sort of compelling for someone that was thinking about starting an exchange or that's part of their strategic roadmap. And, the first question that I have for you would be around the brand, because even when I think about something like, even for everything that FTX has done, I still, as a crypto native, feel differently about FTX than I do about Celsius. Even though ostensibly they kind of did the same thing, those two things are different in my mind because FTX at one point just had such a stellar brand. I think they really did. I think they had like a really blue chip, very premium brand. And I'm sort of wondering now to myself, I didn't have any money on FTX. I actually never used it. But I do wonder to myself, like if I was a user, would I go back? If I lost some money, but then I kind of got made whole again and I was really sure that there was new management, would I stay there? I don't know. What do you think?
So it's such a good question. I think one of the hardest things to do in crypto is to break out in terms of just notoriety or awareness. And to your point, FTX is going to have the highest level of notoriety and awareness. The question, though, is that positive or is that negative?
Right.
And in a lot of ways, I think, people talk about brand building as, just having the best positive reaction with their customers and, maintaining that customer relationship through positive interaction after positive interaction. I think there's an element of it that just because you are notable, you're at least going to have an in to be able to get in front of potential customers. And how many of the, I don't know how many, let's say 100,000 people, 10 million people used FTX. How many of those people would come back? No idea. So hard to tell. I think a lot of that, frankly, depends on how well the process goes through the bankruptcy asset proceedings. If you get 85, 90 cents on the dollar back, and maybe it's denominated in USD, but you get some crypto and some asset, like I can imagine you go back and you say, maybe this is worth a shot again because you've got, where else can I do some of the things that you were allowed to do on FTX? It's not really possible for you to get a new Binance account because they've shut down, opening up new accounts for people, and KYC restrictions are at the highest. And maybe there's some smoke or there's some fire where there's that smoke right now. And maybe that brand is declining in a certain way. Maybe you want to be able to trade perps on assets that you don't have access to in the US. Like there could be a reason why people come back. I'm just so hard pressed to actually think that would be a sustainable business over time. You could probably start with the FTX brand to break through, but I think you'd have to change it pretty soon thereafter.
I think yeah. So I agree with you in my rational thought process, but I weirdly still, when I just listen to my emotional side, I sort of still think of FTX as a cool. I know this sounds so weird. It's not a bad brand. Let me give you an example. So Jason and I, we do a lot of work with advertisers, and one of the things that we'll do is sit down with a founder and be like, what is a success story of a really great brand in crypto that you love? That you just think man, if I could just do what this company did, this brand, like that would be an amazing success story in the standpoint. And we sat down with one today. It's very like new, up and coming, like very cool. You know, people would know their name. And I asked that question. I was like, "What's a great brand success story?" And actually, the first one they said was Eigenlayer, but then the other one was like they thought about it, they were like, honestly, before they blew up, FTX like really crushed it. And like what they did super well was that they were a big company, but they did a really good job of like the memes. They didn't take themselves too seriously. They had a good brand. And I just, even after all this shit, like Celsius wouldn't use it in a million years. If someone like John J. Ray, that was like a beast TradFi guy that was kind of good, like took over FTX, I'd probably be like, I don't know. I'd be more inclined to.
Yeah, I mean, okay, so going back to it, the three assets, you got the tech stack. Question, does the tech stack still include the backdoor or not? TBD.
Better not. Better not.
But okay, so this is my point. You've got the brand and then you got the customer list. The brand obviously was huge. It turns out if you spend hundreds of millions of dollars, in anything, you could build a pretty decent sized brand if money is no object. But I think the customer trust is just eroded because so much of this is based around. If you think about what makes a successful crypto exchange, it is liquidity and it's security, and that's basically it. Functionality, I think, you can kind of differentiate on functionality, but the bedrock of what makes a successful crypto exchange is liquidity and security. They've completely eroded their trust and security. And so there would have to be something, and liquidity is something that begets liquidity. You're going to have to get market makers back on. It's like the investment dollars just to be able to get that liquidity back is potentially insurmountable. So I'm just of the mindset that someone may start a crypto exchange with a customer list of FTX, but I don't think it's going to have the tech stack, or at least the majority of it. And I don't think it's going to have the brand FTX. Just because it's so tarnished at this point.
Yeah, you're probably right. And the counterpoint to what I was just saying is that if you consider these exchanges bank-like, I mean, no bank has ever paused withdrawals and then ever survived. Like once you break that trust, it's a red line, and no one ever recovers from that. So you're probably right. But people are still bidding on it, so it'll be interesting to see what people end up doing.
There's definitely some residual value in some of those assets. And I'm sure people are taking a pretty hard look at it. And there's also a lot of interesting assets on their balance sheet in the receivership of the bankruptcy too. So what they kind of like package together and how they kind of want to parcel this out, it'll be really interesting to see how it comes out. But I mean, to your point, Bullish, the exchange that seems to have never was, that is a case in point example of how hard it is to break through without any sort of brand or notoriety or awareness or hundreds of millions of dollars of marketing spend. You kind of like, I don't know, like, do you know anyone who's ever played around with Bullish?
I'm not 100% sure. I think they have like a pretty sterling like investor list, like Alan Howard and Mike Novogratz and all that was involved. I'm not really a trader myself, so I'm not 100%. To be honest, I kind of had this blind spot about who actually uses what exchange because I just don't trade that much. But I do think, like, to your point about, like, yes, everyone can build a brand if they have infinite money, but I will say there are a lot of companies in crypto that basically have had infinite monies that like have not built a brand. I think you could look at a lot of the centralized exchanges that have spent definitely hundreds of millions of dollars and don't have the same brand. So they did something right, but so I guess we'll just have to see where it all shakes out. It's kind of a fun like strategy question. I think I'm actually going back on what I argued before and agreeing with you that maybe there's some residual amount of customers. You'd probably have to change the name, and maybe it's worth something to someone. Probably at a really steep discount. You'd have to basically rebuild big parts of the tech stack, and it would probably have to be in the strategic roadmap of some company like Figure, who obviously has that's part of their strategic vision for whatever they're building. So, okay, I've got another question for you here, which is, I mean, so let's just, obviously it's unwise to assume anything in terms of price that this is going to continue or something like that. Actually, last time, on the last episode we did with Vance, we're kind of going through like almost like a bull market checklist of like things that you would be looking for. I think the thing that's starting to resonate with me or sort of give me like flashbacks to 2018, 2019 is this kind of like grinding price action that Bitcoin is doing right now, which just like reminds me of, and even today, so today we're recording this on Thursday, the 9th. Bitcoin had this really steep run up, which is almost definitely, I mean, just looks a lot like the kind of gamma squeezes that used to happen in the like 2020 sort of time period where option sellers got cut off sides and they got squeezed for it. So it's like these sort of little things are kind of reminding me of that time period. Obviously, no guarantee that it's going to play out the same. What are some of the things that you sort of look for or would give you confidence to be like, oh, okay, like that's another, like check that box. Like this is something else I'd be looking for to give me confidence that we're in a different regime than we've been in for the last couple of years.
Yep. So I actually don't think that we're at the point of like the gamma squeeze, like shorts having to cover their shorts, or like option sellers having to cover their call options that they sold. I think broadly we're starting to see a recognition of what is set to probably happen, which is institutional capital moving into spot ETFs. To take it back to where we started, Van Eck and 21 Share or ARK announced their spot ETH ETFs, I think like a month ago, September 6th. May 2024 is when those final deadlines are due. So in a lot of ways that you see, okay, Bitcoin is the first mover. Bitcoin's going to be the biggest, it's going to attract the most attention in dollars. Then it's like, okay, well, what's next? And I think that, okay, what's next is sort of what is playing out right now. And I think it's institutional, probably sideline capital that's been sitting around for a while that's making moves in. And the reason why I say this is, so the ETH BlackRock ETF was announced or is expected to be announced soon. They filed for the formation documents. But one of the more interesting things that's been going on is what's been going on in the Grayscale Chainlink Trust. And I don't know if you've seen this, but the Grayscale Chainlink Trust, so, it's a trust. So there's a market value for the actual trust itself. There's an underlying value for how much Link is actually in that trust. Like this thing has completely dislodged. The trust is up like 500, 600% and completely surpassed basically the NAV of that trust. I mean, it's a fascinating chart. But you think about, okay, who actually has access to that Grayscale Chainlink Trust? It's institutional and it's traditional finance people. And so I think you're starting to see, some of the, okay, Bitcoin's going to happen. Well, what's next? Questions being asked. I think it's driving a lot of market momentum, but that's not in my mind. Like, yeah, here we go.
That's just so funny.
Come on.
That's so funny. Yeah. Oh my God.
And that's an institutionalized product. And what we're looking at here is I think Chainlink, at least on this chart, is probably about $14, but the Chainlink Grayscale Trust price is something like $45.
Yeah.
And that is the difference between, the market price of the trust itself and the underlying holdings per share, which is supposed to be the representative, like fair market value of the trust.
Yeah. There have been some pretty big premiums to NAV on some closed-end Grayscale products, but that is about as big as one I've ever seen, I think.
Hilarious. I would also, a person on our team, Adam, formerly of Chainlink, sent me a hilarious screen grab of thousands of Link Marines in a Twitter Spaces. And the Twitter Space title was $14 waiting room. And you've got thousands of people in this Twitter Spaces just singing to each other and like doing these like chants. And it was like so funny.
Wait, I forgot we've got Chainlink God coming on the pod.
I was going to say,
I connected with him. I honestly think it's one of these areas that I've just like slept on. And I was like, I should talk to someone about this. And he's a really smart guy. I was like, we should do something on Chainlink. So that's actually pretty fortuitous timing.
We'll have tons of fun conversations next week as well. But so all of this is to say, like, I don't think that this is the blow off the top like Gamma Squeeze, where you see it rocket up and then, get sold off at the top. Like, it's going to ebb and flow, of course. This is the, like, animal spirits are starting to come back into the market. You're starting to see these green shoots of cult-like experiences and mimetic movements. And I think, all of this is with the backdrop of institutionalization for the two core assets that are coming probably in the next, like, 7 to 8 months, if not sooner than that. How much they will actually move, how much the inflows will actually be, remains to be seen. Everybody has their guess. But I think just with that backdrop, you've got so many positive catalysts. So one of the questions you asked was, what are, entrepreneurs saying? This is also the time of year where we have all of our, like, end of year, hey, let's check in LP calls with, like, our biggest LPs. And Vance is actually at an LP event right now. And kind of the broad sentiment across the board there is everybody is getting ready, and they know that things kind of come back on, in the next, like, 2 to 3 months, or 6 months. And so I think the institutions are, the smart money. They're the fastest horse. They're the ones that are moving quickest. And they're going to start to fill bags ahead of all these positive catalysts that are 6 months away.
Yeah. Okay, I've got some sort of follow-up questions there. So in terms of some like the idiosyncratic, like, green shoots, bubbles, there's like Chainlink, and it's actually funny. So one of our analysts went to this Goldman Sachs conference. This funny little anecdote, just talking about Chainlink, and Sergey Nazarov, the Chainlink founder, was speaking there. He said of everyone at this whole Goldman Sachs conference, like, people were swarming this guy. Like, everyone wanted to talk to this guy, which is just funny. And look, I mean, Chainlink has been rallying like crazy. There's the Solana thing that's taken off quite a bit. And then I guess I'm trying to think about other, I guess those are really the big two. And then there's Bitcoin, and Bitcoin's the sort of institutionalization narrative. And we just got the ETH news sort of just dropped today, but it looks like that April is sort of the rough timeline that people are now thinking about. So there's kind of a dual institutional narrative, and then more green shoots, maybe crypto natives moving.
I mean, the other one, and it was reported on last week, I can't remember, I think Blockworks covered it, but there's been sort of a resurgence of AXS, Ronin, SLP, which are Web3 gaming assets. Like, these subcategories are starting to make a comeback after, the 99% sell-offs that they've all gone through. Yeah. And, a 300%, 400, 500% move upwards just means that you're only 95% down. But, it's a 400% return off of the low. So, like, these aren't the crazy times. This is really just like the beginning of the start. And that's kind of how I would describe where we are in the cycle. And frankly, it feels like 2019 again, like the end of 2019. You had these little bull trends, and then it would drop for a couple weeks, and then you go up, and this stuff starts to take effect over a couple of these cycles, because more and more people will start to notice it, and that's when the momentum starts to shift.
Got it. Let me ask you this. So I feel like what we saw in the last market cycle, the rotation went something like this. Bitcoin was the firm leader, right? Like, spot Bitcoin price sort of led everything. ETH trailed a little bit, but there was a period of time where it was like almost like 1-for-1 catch-ups. Like, Bitcoin would run first, then the market would rebalance ETH up, and then ETH started to run ahead of Bitcoin, and then that really, like, rotated into alts, and that's when you had, like, the crazy Axie run, Solana, some of these, like, honestly, like Cardano and BNB ran super hard then too, and then the sort of NFT craze, all of that kind of stuff. I feel like back then, it wasn't as widespread, the knowledge of that playbook. But now I feel like that's more within recent memory of everyone watching that cycle happen. So to your point about, like, institutions asking what happens next, do you think that plays out the same way that it did last time, or very similarly? Or is it different because people know it now and they're like, oh, I know how this works, and instead of, like, waiting for alts to run, like, I'm just going to skip and go right to alts or something like that? Do you know what I mean?
If we didn't have, the thought to be impending Bitcoin ETF followed by the ETH ETF, I would have said, a smarter person who's lived through a couple cycles says, oh, Bitcoin's pumping, great, I'm gonna go buy, some index bet on DeFi or Web3 gaming or whatever it may be. Just skip to the final conclusion, because dollars moving into those assets have a multiplication effect much higher than Bitcoin or ETH or Solana or anything else. The difference, though, is I think if we have what is expected with these ETFs and then what is expected with the inflows, there is going to be a different element this cycle, which is basically just duration hold of those ETF based assets. And what I mean by this is, let's say people who want to buy Bitcoin or ETH are generally able to do it on the platforms that we're talking about, the centralized exchanges, maybe even like the Grayscale Trust. I don't think there's too much activity there, though. But if most people want to buy Bitcoin and ETH, they can. So the ETF products are targeted at a different audience. And that different audience is largely made up of money managers. And the way that either a money manager works in terms of asset allocation and providing their services, or managing retirement accounts or automated retirement accounts, is that they allocate based off of a percentage basis. And that means that people who are contributing to their 401k, their IRA, or they're adding more money with their investment manager, every single time that they do that, every 2 weeks they get a paycheck. That means that there's sort of this consistent buy in terms of that 1%, that 3% going to Bitcoin, going to ETH, et cetera, which builds a base of duration of hold that I think we haven't seen yet in previous cycles. If Bitcoin went from 5K to 25K, there's bound to be a lot of the people who bought it at 5K who are like, great, I'm going to take the 5X and, pare back and see what I want to do next. But that doesn't exist as much in the professionally money managed industries. Maybe there are people who will trade the ETF, based off of vol or based off of swing trading. That's going to happen. But the majority of people, I think, are going to be buy and hold.
Yeah. You know what? Just anecdotally on that point about institutions. So we put out different strands of content across different channels. Like some of our stuff is really crypto native, some of it's really institutionally focused. And honestly, for a while, the more crypto native stuff has been trouncing the institutional. Recently, within like the last 2 months ish, there's been a change in sort of what people are interested in and listening to, and that also has been mirrored. So we've got this coming conference, DAS London, which you Advance will be at.
Excited to speak.
It's gonna be huge. Gonna be great. And you get a Bell to BC. Oh shoot, I forgot the actual discount code, but you get a discount code. Click the link in the bottom for your tickets. But the reception to this conference has been like, we've been getting on the phone with hey, just kicking the tires of the Goldmans, the JP Morgans, the 0.72s, these big funds. Hey, would you be interested in speaking? They're like, yes. Not oh yeah, the interest is, and I feel like just it's more anecdotal evidence to the point that you were making about just people being sort of ready and moving off the sidelines and wanting to get back into the mix and realizing that these big catalysts are close. And we haven't even talked about the halving, but the halving is also, I think, in the zeitgeist more than it has been in previous cycles. Last halving, we weren't getting notes from Goldman Sachs and Morgan Stanley being like, the halving isn't priced in yet.
You got Joe and Aaron Ross Sorkin talking about it live on MSNBC, on CNBC.
Yeah,
it's crazy.
It's crazy. That's bananas.
And to be clear, historically, it's been 18 months post halving for that massive run up and the realization of it, mostly because you've got a bunch of miners and really the halving, removing, I don't know, probably $6 or $7 billion at this point worth of supply overhang from the market. Anecdotally, I think, one of the not miscalculations, but misunderstandings of 2023 was just how much latent ETH supply was left within miners. And I think that, they've been selling out over the course of the year. And I think we've talked about this on previous episodes, but, you had that large call seller a couple of weeks ago, which kind of initiated the run up. There are all these strikes at the end of October at 1,700, 1,750, which had to be covered. I think Bitcoin goes through similar cycles. in that, proof of work to proof of stake represented just a total shut off, right? And everybody expected, well, as soon as it shuts off, like you're not going to have any, miners selling because they've already been selling. I think that was wrong. And I think that that's why you see an 18-month lag historically on the Bitcoin halvening. It's because a lot of these miners hold on to their Bitcoin to find opportune moments to sell. And so I think it's going to take, the halvening will be a big moment, but it's really the effect, months and quarters after the halvening where we're going to see more positive price trajectory, I would say.
Yeah, I think you might be right about that. All right, everyone, we will be back to the program in just a moment. But before we do, I want to share something that Blockworks has been cooking up for these last couple of months. March of this coming year in London, Blockworks is hosting DAS London, the largest institutionally focused conference in all of crypto. We are gathering 1,200 of the world's largest asset managers. So think TradFi macro funds, crypto native funds, big allocators, and financial institutions. So banks, payment processors, etc., all in one spot. It's very rare to get the likes of Goldman, JP Morgan, Point72, whatever, all in one room so you can know what the big money is doing. We're diving into the themes that they care about. So we're talking about the intersection of macro and crypto, where we are in the cycle, real world assets, so everything from stable coins to on-chain treasuries to tokenized assets. It's going to be a blast. But the other reason you really want to go is London, baby. Center of the world at one point. You got pub culture, you got fish and chips, great beer. It's going to be a blast. So because you're such great listeners to Bell Curve, there's a code BELL20 that's going to get you 20% off. So click the link at the bottom of this episode. It'll take you right over to the homepage. You'll see all of our speakers and use BELL20 for 20% off. Ticket prices are going up soon. Make sure you go use that code. I will see you in sunny London town in March. Do you ever, I spoke to Adam Back last week. There's a really interesting chart of Bitcoin hash rate, which has bucked this trend that it used to have of, like, usually what happens with hash rate and price, the relationship there is that price leads hash rate. So the price goes up, just like in any sort of commodity producer relationship, the commodity producer, in this case the miners, try to chase that price. It brings more hash rate online, and then it ends up, there's that kind of lead lag relationship. But if you look at, like, this is the chart of what that looks like this last cycle, which has been a massive deviation, which is, get up on my screen here. Like, the price has been tanking, but hash rate is just like a one-way stream up, which is really, really bizarre. And I asked Adam Back about this, and his explanation was one of the things that changed in the mining industry previous, and this might explain some of the ETH overhang as well, as the availability of credit around this time. So basically, as this was going on, there was a bunch of mining equipment that got purchased, via having access to credit. And then what happens is there's like a lag in between when that gets purchased and when you actually get the ASICs delivered. So if you can imagine like a bunch of ASICs getting delivered like right around here, well, okay, now it's kind of a sunk cost. The market has turned. You probably can't even sell those ASICs if you wanted to. And so it's kind of like, well, I might as well just turn these things on and mine. Hence why it's just been such a brutal road for Bitcoin miners recently, actually. And you see this weird divergence in the relationship between price and hash rate. But
that's interesting. I mean, yeah. I intuitively understand that. I think the other thing, so hash rate aside, the other thing I think about in terms of the last 18 months, and there's going to be natural sort of like, and so many people put out these analysis of like Metcalfe's law analysis. So what's the network value of Bitcoin, or what's the network value of any of these ecosystems? And you're valuing them based like they're a network. And, the intuition there is that networks grow proportionally to the number of people who are in the network, and as these networks, or network value grows. And so you can kind of assume, basic understanding of where value should aggregate. But the one thing that we don't ever really think about or apply to that is the structural process of removing major players from the ecosystem, and the structured selling that was required to do so.
Yeah.
Was just such a massive exogenous effect to the progression of that process that we're probably undervalued to where those, network valuations would forecast right now. And it's because we're barely still picking up the pieces from all of these things. So I think, so I think of it in two ways. There's the hash rate that is, that's something that's really fascinating, and credit to go buy Bitcoin miners. I mean, maybe it's a good time to be buying Bitcoin miners if there's excess supply. But then there's also the question of like, if you remove the massive blowups and Three Arrows just fades away, FTX just fades away, they don't absolutely get whomped. Are we where we are right now if those two things didn't happen? Hard to know, but I would definitely say no.
Yeah, I tend to agree with you there. Is it a good time to buy Bitcoin miners? Like, I don't know, but Blockstream does have this product actually where they notice there's honestly, you know what? It's similar to the relationship of we've talked about this before about how like public market proxies for crypto, like Coinbase or MicroStrategy, end up running up more and then getting hurt more on the way down because there's this sort of hidden premium. Similar to mine equipment. So it's like on the run up, the value of the ASICs actually runs up more than Bitcoin, and then on the way down, you get it on the way down as well, which kind of makes sense to me because when the price of Bitcoin goes up, everyone's like, "Oh my god, I need these things." Bitcoin's going up $1 million and stuff like that. So we haven't seen any of those either. We haven't seen any $1 million Bitcoin pricing predictions either. So
what are you talking about?
Oh, really?
Yeah,
I haven't seen
Michael
that,
Saylor
no.
said 5 million. Kathy Wood said 1.5 million.
All right. Well, I will say I saw Kathy Wood give this it was like 20. We had started that podcast with Pomp off the chain before it was the Pomp podcast, and Kathy Wood was one of the early guests. So this must have been 2019, and she gave this price prediction for Tesla. She was like, our like base case is $700 and our bull case is 4,000, and I was like, well, I think my jaw was actually open. I was like, I called Yano after. I was like, dude, I just heard the craziest. She said this, and this was pre-stock split and everything. So now it's
Oh
not even gonna hit.
man.
But like, yeah, I mean, I wouldn't fade Kathy. I know people like to hate on her because she makes these big bold predictions, but I'm a Kathy Wood fan. I like her.
Anyone who is a growth investor over the last 18 months had a tough time,
I
but
agree.
I think if you zoom out a little bit, she will be proven right.
I agree with that. So, one other thing I'd be curious to get your sort of take on, just as someone in the industry, maybe as opposed to something like the actually what happened. But there was a very interesting post from Evgeny Gaevoy, who is the CEO at Wintermute, about Near and Aurora this week. So basically, Evgeny accused the Near Foundation and Aurora Labs of failing to redeem 11.2 million in USN stablecoins for USDT as promised under a deal. So basically, USN is like it's an algorithmic stablecoin, very similar to Terra Luna. They switched from being an algo stablecoin basically to one which is backed by USDT after the collapse of Terra. I guess Evgeny from the Alameda estate purchased $11.2 million worth of USN, and then they basically said, no, we actually are not going to refund you. So Evgeny made this whole Twitter post, and first of all, I thought it was interesting. I have no idea who's right in this situation. It looks like there was, some backstopping from the Near Foundation of this claim. I thought about this a lot after, when FTX blew up and everyone's like, we have to call out bad actors in the future. I was like curious what you think about that, because then people have to like air public grievances and no one really likes doing that. So I don't know if you had any thoughts on the Evgeny post or this idea of like calling people out on Twitter, because I see the merits to it for sure, but I also I could see where it could go wrong too. Just curious to get your take on the whole thing.
Any sort of perspective that I have here is going to be dislodged from any particular events, because every single one of these types of situations is so specific. You can't just blanket say one way or another. Listen, there have been historically a number of times where people in the space have done nefarious things, to say the least. And I would guess 95% of them probably go unnoticed or uncared, because it's the way that they operate. Anything from it's not working, so we're going to shut it down and return the treasury. Maybe you should have kept working harder on it, or maybe there's another way to do this, or you're just kind of like, okay, as an entrepreneur, I'm going to move on, which is totally fine. But, people may be pissed off about that. To like rugging something, being able to be anonymous on Twitter and form a protocol. And this is more DeFi summer days, but like all of those types of situations are just not copacetic to straight up fraud. And obviously we've seen that as well. But there are a lot of times where people in the space think that they, can get away with things. And I think it's important, when you feel like you have a strong case, to fight for that case. And, from our perspective, if we were ever put in a situation like that, we have a fiduciary duty to our LPs. And we have to make sure that we do as best we can to represent them when we're the ones that are in charge of, assets in question. If, it's business tactics for Wintermute and, Near to go after the situation, that's totally fine too if they feel the need to. But, pulling on the thread of like public dismay, I think doesn't really ever get that far. You may get a couple people on Twitter to be like, that's it, I'm never using, X or Y or Z. But most people are just going to, the press cycle will move on and people will forget about it. And so I think there are other means of enacting, getting right by a situation where you feel wronged. But doing it in public, I think, is just sort of like a last resort, or maybe it's, it's not something that we would want to do.
Yeah, because I think it's tempting as well. By the way, I love Evgeny and Wintermute. I have no knowledge of this at ever. It was the first time there was a lot of chatter about that post FTX implosion. It's like, if you see something, say something. And this was the first instance of that I publicly saw by someone that I respect a lot and follow. And it was like, oh, that's kind of that's interesting. So I guess we'll have to see if we see more of that. All right, last question for you. And maybe it could be more of a broad, almost like hypothetical, but I saw this week that Near and Polygon released something. So basically, Polygon and Near bringing this ZK Wasm idea to life, where they're basically simplifying the way that ZK proofs work on ZK proving works on Near, and they're sort of aligning with Polygon, which brings them closer to Ethereum. Frankly, it's a little bit over my head technically, so I'm just not even going to touch that. But here's my question to you, because this is what got me thinking. So there are a bunch of protocols, like now they're like, I'm starting to think about some of these protocols I haven't thought about in a while, like Near, Avalanche. I actually do think about this one, but Celestia is a really good example of a new L1. And some of these alt L1s, or like alternative layer ones, have chosen to sort of counterposition against Ethereum. And they've been like, you know what, we're really different. Solana is a really good example of someone that's counterpositioned against Ethereum. And others are like, you know what, we're like kind of aligned and like signed, and sort of like, like Celestia is one where it's like, I see a lot of the sort of researchy events that I go to. It's like Celestia people and Ethereum people, and Cosmos is sort of somewhere in the middle. I guess like if you unilaterally had control of a layer one, how would you think about that? Like, would you go the Ethereum alignment route? And there are some pros and cons with that strategy, or would you go the counterposition route where you're like, I'm just totally different in ways X, Y, and Z, and this is why I'm different and unique?
So, I mean, on the ZK Wasm stuff and Near, I'm looking at a tab or two right now where it's like, okay, I need to read this later. So I also don't have like full context on that one situation. But next week I will. I don't know, the kind of rudimentary way that I think about it is there's two main functions for a blockchain. There's settlement, and then there's execution. And execution is largely how you're going to interface with either the applications or the customers. And I think we'll see if this trend continues, but we're starting to see maybe even a third layer, which is the UX. And UX, by and large, is either going to be like a self-custody, or it's going to be sort of like a pseudo centralized hosted experience, depending on what it may be. So like that's the basic layers of the stack in my mind. You've got Ethereum, who is both settlement and execution. And then you've got L2s that focus more on execution and transaction throughput at the execution layer than they do the settlement. Solana, monolith. So full stack, execution, settlement. It's also possible now that you can have SVM execution environments that are built on top of the DA or settlement layer of Celestia. So like you're starting to see all the commingling of these different layers based off of different parts of the tech stack for these ecosystems. And so it's impossible to say like, I think you should counter position or I think you should align. But what I do think you need to do, and the only way for these blockchains to ultimately get adopted, and is to define an application category where you have a true advantage. Ethereum, and this is based off of the 2020, 2021, run up in DeFi summer and all of those things. They have DeFi. They have internet moneyness. It's where the TVL exists. Even look at the TVL chart of Solana. Like it's not anything comparable. It's where also the best NFTs exist because of the moneyness. So like they have kind of taken that realm of the world. And even today, I was trying to like, we have a wallet and we're trying to like bridge assets and like trying to send Ethereum from L1 to Optimism. Like it's still such a clunky experience. Why can't I, one click swap, 0.1 ETH just to be able to put gas into an unfunded wallet? Like the experience, the user experiences across these different layers is also garbage. And so I think, Solana is very obviously going after speed and throughput, and there will be applications and therefore cost, and there will be applications that gravitate towards that. My question is, what will be the first that hits that breakout scale, and when will it happen? But like that's the counter positioning that they have. Celestia says, hey, you want to have Optimism or Arbitrum execution, instead of settling back down to ETH mainnet, like settle on our DA layer. Like that's totally acceptable. Or you can even have ETH mainnet, settle down to Celestia. So I don't know. Maybe this is like a very rudimentary way of looking at it, but that's kind of how I think about it, and it will be defined by the application categories. Like if we look at where all of the games are being built, it's not Solana, even though transaction throughput is highest there. It seems like Polygon is making great strides. Ronin, obviously, that we're talking about, making great strides. And I think we're going to continue to see that kind of application category differentiation. That's my quick and dirty on it.
Okay, let me follow up question for you here, because there's the actual like application, like what these things do and how they all sort of mechanically go together and where they belong in the user flow. But then there's this other component of crypto, which is like it's almost like the distribution mechanism and the importance of community, especially for layer ones. Like one of the things that I think Ethereum got super right, it was, I mean, in a sense, a counterposition to Bitcoin. That I feel like that maybe takes away from it. But what I mean by that is like the Bitcoin community is like this really hard, almost like religiously, it's almost like a return to like Roman sort of values of, they've got this whole thing going on. You know what I'm talking about? Ethereum's the opposite of that. It was, very optimistic, very like a hopeful, very research based. And one of the things that was, I think, attractive about Ethereum is you could very clearly say this is what makes a Bitcoin person and this is what makes an Ethereum person. I think Solana had that as well. Like they were just like, we are different. And the way that I would distinguish it is like, they're like engineers. They're like more pragmatic, more engineering focused, just a different vibe. And so I feel like that's kind of an important, squishy, subjective, but still really important like indicator of success for one of these communities so that's what I'm kind of trying to get at, where it's like, you can sort of strike out on your own, but there are a lot of these L1s where I look at it and it's like, what makes I don't want to seem like I'm picking on anyone, but I can't really easily define what this person looks like a Polygon person, so I wonder about that. I'm like, I don't know. It's that might be maybe one of the disadvantages of sort of aligning with Ethereum, so to speak, because you like fail to develop your own person, if that makes sense.
So let me play back to you and change a little bit and tell you more of my perspective. Also, just to be clear, like we're very bullish on Solana. We invest in the ecosystem across the board. It's just more of like there are differences, and that's kind of what I want to hit on. Like I remember very distinctly in the 2016, 17, 18, 19 era of all the Bitcoin people came out with pitchforks when Ethereum launched, and it was like you're never going to scale. It's never going to work. DeFi doesn't mean anything. Like, we're going to build DeFi on Bitcoin. Like, we're going to have NFTs on Bitcoin. It's like, okay, sure. And I could absolutely see. I don't think Ethereum will fall subject to the same issue, which is, okay, like other blockchain over there, like, good luck, you're never going to be able to do it. I think one of the benefits of being optimistic around your approach to open source development and building blockchains is that there could be many ways that everybody wins. And it sounds a little bit cliche to say that, but like, Solana is going to have its own application categories that are just probably not even feasible on Ethereum. Maybe it's more financial oriented because of the high throughput. Maybe it's more consumer oriented because of the low cost. Like, just remains to be seen is kind of the sentiment that I'm expressing. But it will be different. And I think Ethereum also isn't going to come out with pitchforks when, those application categories do emerge. I think they're going to be like, great, like, we've got our own stuff going on over here too. So I agree with you. I mean, if I were to guess, I think probably consumer application categories are kind of the next thing to hit, just because it seems like DeFi and the TVL, at least for now, is staying on Ethereum. And a lot of the games are trying to tap into that liquidity. But, the other reason why you would have a blockchain win or lose is because you're able to attract new users. And I really do wonder, like, we've lost a lot of people for sure in the last cycle. We're going to gain a ton of net new people in this cycle. Like, if you were totally fresh, no dogma, no history coming into this ecosystem, where would you go? And that's kind of the other angle here too, is like, where are all those net new people coming? Because it could be, a totally new platform. It could be Solana. It could be Ethereum. Like that. That's kind of, I think, the really important question to answer. And we'll see.
Yeah, could be a totally new platform as well, and that's what I like. Even outside of like Solana, Bitcoin, Ethereum, I've been thinking about these like kind of like near Avalanche ecosystems as well, because like there's so much. That's what I was really asking. I was like, for some of those which are like big, like very big. Even some of the layer twos, I wonder if this ends up being a factor as well. Like, is there an Arbitrum person versus an Optimism person? I kind of think there is a little bit. Like, I find the branding element of it pretty interesting.
Yep.
And I've been like wondering what some of these layer ones, I sort of feel like if they're going to make it this cycle, and there are a couple that are in limbo that could make it or could not. And it's like, you probably have to do some work defining your person and community, and I'll be really, and you know what, there are probably gonna be a bunch of new ones that like Monad is launching soon. Like, that one seems pretty cool. I don't know, I've got no idea, but not financial advice obviously, but
NFA.
I'm just interested. I'm just curious to see how it all sort of plays out.
I mean, I will say though, like, going back to it, the community development is something to not scoff at. It's something to really dig into and pay attention to, because everyone loves a comeback story. Everybody loves an underdog story. And you may be fresh and new and you're trying to get new people to come over with you. But if you already can build the network effects of having some people there, having some value there, it's going to take off. And so I think it's not necessarily like what has the best tech or what has the best applications. It just is like, what is the best option when that onslaught of new users comes in and they're like, where do we go? And then that just sort of like the snowball starts rolling downhill.
Yeah, I think you're probably right. All right, partner. I think we can call it. This was a fun one.
This is great. See you next week with CLG.
Chainlink God, baby. I'm really pumped for that episode. Actually, the Link Marines they're a fun community. So that'll be good.
Tell me about it.